Hello, and welcome back to the KingCast. I'm your host, Frank Roach from the Economics Division of the Social Sciences Department, led by Mr. Tom Zoubek. Always great to have it back with us today. Our crew is back in place. Rahill, Jaiswal, and Jack Zipper on sports. Good morning, boys. Our econ experts, Lily, Ryan, and Nicole Roer, are back with us today. Of course, our trusty editor, Jake Murphy, is with us with some talk about Bitcoin. And we have a new co-host this week, our first alumni joining us on the KingCast, Bobby Cribbin, class of 2018. Bobby, great to see you. Welcome to the KingCast.
Great to be here. Thank you, guys.
Bobby is a junior at Indiana University studying media. He has a financial internship this summer with Piper Sandler. Well done, Bobby. And has a real strong passion for the stock market. Bobby and I met, of course, when I first joined King. He was in my financial market economics class, my money and banking class. We had a lot of good times there. We had a great group. Remember, Bobby?
Yes, we really did.
We had a great group of students in that class, and we had some fun. I affected this guy with a little bit of interest in financial markets, so he's going to talk to us about the stock market today and update what's the craziness we've seen over the past couple of weeks. As always, we start with hot topics, and we have some good ones. Inflation is back. Inflation, where is thy sting, is the phrase from the 1990s. With the passage in the House of the COVID relief bill, $1.9 trillion. That's going to bring us almost $6 trillion in 1 year by the fiscal side, another $4 trillion for the monetary side. Markets are beginning concerned about inflationary pressures rising in the fixed income market. The yield curve is beginning to show that fear. Nicole Roer, you've been looking into what's going on with the Treasury yield curve and concerns about inflation and the rotation out of stocks into fixed income. Tell us what's going on.
Yeah, thanks, Mr. Roche. This is a complicated area, but let me take a shot at explaining the current situation to our viewers. First, a quick lesson on yields and treasuries. As for bond yields, the yield of a bond is the percentage return you get on an investment on an annual basis. If you invest in a $100 bond and you get $10 interest each year, the yield is 10%. It is similar to the interest rate on the bond. Yield differs a little from the interest rate on a bond because after the bond is issued, if you can buy that bond for a different price a month later at, say, $90, the interest rate stays the same at $10, but the yield goes up because you only paid $90 to get that $10 interest payment, so the yield is 10 divided by 90, which is 11. Treasury bonds are bonds issued by the federal government to fund government activities. They vary in duration from 3 months to 30 years. Treasury bonds are considered risk-free, meaning there is no risk of not getting paid back, because it's believed that the government will not default. An investor can still lose money with the Treasury bond when the yields go up, because that means that the bond is worth less. If instead of getting a 10% return on your bond, the market is now providing an 11% return on that same bond, the 10% bond is worth less, as I previously mentioned. With that quick lesson, let's turn to the events of this week where Treasury yields have been rising. The key question is why? There are 3 primary reasons for rising rates. The first could be concerns about inflation. The second is that bonds are becoming more attractive investments as compared to stocks. And the third is a rebounding of the economy. If rates are going up because people fear the economy is getting overheated and inflation is coming, that is negative for the stock market. Growth stocks provide a good example on why the stock market will fall from inflation. With growth stocks, the investment relies on the investor getting cash flows from the company in the future, and we know from the time value of money that receiving $1 in the future is less than $1 today. So if your future dollars are now worth less because of inflation, the stock is worth less. Likewise, if bonds are becoming more attractive investments, that is negative for the stock market. The stock market has had a strong run-up over the last 9 months, and the now estimated dividend yield on the S&P is about 1.5%. With the recent jump in Treasury yields, that is about the same yield as an investor would get in Treasuries. So now an investor can get about the same yield investing in Treasuries as investing in the S&P. Of course, the S&P also has a growth aspect to it from companies that are growing, which Treasuries don't, but Treasuries have the advantage of being super safe in terms of getting your money back when the bond matures and don't have a risk of default. That may be attractive to investors, especially in the current environment. There is a positive scenario for the stock market from rising Treasury rates. Rates could be rising because the economy is continuing to rebound and investors are getting very comfortable investing in riskier assets with higher expected returns, as opposed to very safe Treasury bonds with very low returns. If rates are going up because of risk-on approach, that should be positive for the stock market. Regardless of the reason, there are a number of negative effects from increasing rates. Increasing interest rates make it more expensive for companies to invest in new projects since many projects rely on borrowed money. Rates are still very low right now, but if they continue to rise, this could slow down growth plans and companies may have. Rising rates would also hit the housing market, where many home buyers rely on mortgages to help fund their purchase. Lastly, and maybe most important, the rise in interest rates runs counter to what Fed Chairman Jerome Powell is trying to accomplish. The Fed has been keeping interest rates low to make sure there are accommodating conditions for robust business activity. The President and Congress have been focused on stimulus, and Powell has been focused on low interest rates, all in an effort to offset the damage to the economy from the pandemic. If rates rise too high, Powell and the Fed may need to take stronger action to bring rates back down through open market operations and other tools. We are at a critical juncture on Treasury yields, and it will be interesting to see how the stock market and the Fed respond in the coming weeks if rates continue to rise from here.
Well done, Nicole, as always. Really in-depth report there. You brought some AP economics into the discussion as well, so really nicely done there. This critical juncture that she just mentioned, that really is a nod to technical analysis, right? So we're finding, remember, we have an inverse relationship between bond prices and interest rates. So we're looking for support levels in bond prices and resistance levels in interest rates as identifying points for what we're going to happen here in terms of breakouts. Will the 10-year interest rate continue to rise, 30-year continue to rise, or will they reverse on technical levels? So Nicole, following research this week, what is your take on the 10-year Treasury? Where's the yield heading, say, in the next 6 months? Are we going to continue higher, or are we going to be stopped by some technical levels?
Yeah, so I just want to touch on that 10-year Treasury idea quickly. As I mentioned, Treasury bonds range from 3 months to 30 years, but the 10-year Treasury yield is the benchmark that guides the other interest rates. So it's the 10-year Treasury that everyone has been looking at this past week. My personal view is that the Treasury yield is a warning sign for stock investors. As I reported in prior segments, the stock market is trading at a price to forward earnings ratio that is about the same level as the dot-com bubble. To me, the activity we are seeing in Treasury yields is another sign that the market is reaching a top, and investors would be wise to consider these warnings and then reasonably want to move their investments to safer assets such as Treasuries.
Okay, great response there. No, I don't manage money, but I do advise people on these things. And I've had people out of the market now for a while. If you have money in it, I say keep it in it, but don't put any money to work. I think my prediction may finally come true here in 2021. We are very elevated, again, boosted by the Federal Reserve, so a little concerns about that. Which brings us into a great segue for our next hot topic. And our guest, our co-host, Bobby Cribbin, is going to talk to us today about stock markets. Bobby's been tracking what's going on in the stock markets. Real interest for him. He's going to be working in that world as an intern this coming summer. Bobby, what do you see going on in equity markets today in this rotation out of equities and into fixed income with respect to this concerns about rising inflation?
Well, first off, I just want to say that Nicole nailed it. She pretty much just killed that. So I'm going to be kind of piggybacking off of some of the things that Nicole said because it really does have a really big impact in equities. So Nicole kind of covered the basics of what the 10-year is doing and how that can be negative for the stock market. And for me, what I'm going to be talking to you guys about is directly what type of stocks that was affecting, right? So she was talking about growth stocks. So typically when we think of growth stocks, we're thinking about technology. Some type of company that's going to be helping us in the future will be making money in the future. So just going down the list of what kind of tech and growth stocks got hit in this past month when we saw the 10-year really rising. So Apple is down about 15%, Tesla's down about 20%, Amazon's down about 8%, Alibaba's down 10%. So you can start to see kind of a trend, even with some of the greatest companies in the world who have some of the biggest market caps, great cash flows, are getting crushed. And that should be a huge warning sign, as Nicole said, for investors. That's not something that you would want to be seeing. I think it's very reasonable to say that investors should be a little freaked out if someone like Apple, who's got almost $1 billion in cash flow, is down 20% in the last month. That might be a little bit frightening. And I think what's really frightening, obviously Nicole just said it, the 10-year was trading at 0.92% 2 months ago, and now it's trading upwards of 1.5%. So that's a huge move in 2 months. And that should be something, like Nicole said, should be starting to frighten investors a little bit. And when we start to see this trade out of technology and into more value, so you can start to see people going more into like Johnson & Johnson, Procter & Gamble, or just safer returns in bonds. That is something that is easily going to take a lot of heat off the stock market. And at least in my opinion, if the Dow is trading at 31,000 now, later into the year, I could see that trading down even more, just because technology in the run it went on this summer, it's like the basis of our stock market now. The weight of Apple and Amazon and all these companies they're weighted too heavy. So when we start to get a sell-off in tech, we're really getting a sell-off in the whole market, which is a little bit frightening. And so I'm going to be reiterating some of the points that Nicole just said from a Fox Business article. And so it just continues. The sell-off gained momentum when the yield on the 10-year Treasury note moved to about 1.5%, a level not seen more than a year ago and far above the 0.92% it was trading about 2 months ago. That move raised the alarm on Wall Street, and the interest rates they influence will move far higher. The Friday yield on the 10-year Treasury note was about 1.47%. So again, this is a huge movement, something that should be spooking investors. So Nicole was very right to say that. Bond yields have been rising this month and over the past couple, reflecting growing confidence among investors that the economy is on path to recover. Another reason that the economy is on path to recover, you might have just seen it, the House and the Senate agreed to pass that $1.4 trillion stimulus check. And it also included $1,400 in stimulus check to individual families. That money, we assume, will be pumped into the economy and will have great numbers for earnings per shares, GDP growth, all of that. But it also, at least in my opinion, when I'm looking at this, we will not be able to replicate this next year. So we're pumping all of this money into the stock market, into equities, into companies. But what happens when we don't have another $2 trillion, $3 trillion pumped into next year? What I think you'll see is that year over year earnings per share will be down in 2021 to 2022 when we look at it from 2020 to 2021. So that, although is a really good thing for us right now when we're looking at equities and we're looking at Apple, is saying, wow, they really crushed it on earnings. But what happens next year when Apple is actually down on earnings because we weren't able to pump in all of this stimulus? I want to see how investors kind of react to that in a year, 2 years from now, and see if they're kind of thinking with their caps on like, hey, I don't think it's even possible to try and get the numbers that we just got. Maybe we should be a little bit more reasonable. But the stock market is not very reasonable if we have been doing our homework. They have been buying and buying and buying and buying. It was the fastest recovery that we've ever seen. We dropped about 33, 34% in about 2 weeks, and we rebounded positive to about 40%. So it's been a really crazy run. It's been very exciting. I totally agree with Mr. Roche. I would not be putting your money to work right now. If you're in, I would be cautious. I would be trying to get into some high dividends or bonds or anything like that to try and limit your risk, because there may be a greater pullback that is in the foreseeable future.
All right, great report, Bobby, and nice tie in there with Nicole's report as well. Just one quick notice, we did get passage in the House. We're going to wait Senate passage probably this coming week on the COVID relief bill, and $1,400 checks are in there. Mm-hmm. Now, Bobby, just you put your money management hat on there for a second. You looking to buy the dips? Say we get the sell-off you're expecting. Are we looking to buy dips because obviously we'll go through the recessionary phase and we'll have an opportunity to grow again, or you're gonna stay flat for a while?
To me, it depends. I think that word dip has a lot of different meaning to a lot of different people. So you might meet people who say, I'm going to buy the dip. And to them, the dip means a 2% dip or 3% dip or 4% dip. To me, that's not the dip that I would like to be on. The dip that I was on, which obviously is not reasonable, but the dip that I was able to get on was the legitimate market crash, right? So the dip that I would be looking for if I'm going to try and define dip would be a real correction. It would be anywhere from 10 to 15%. If I see anything like that, and I can see Apple getting into a price of $90 to $100, or Alibaba getting down to $220, that might raise some trigger for me to say, hey, maybe I can put some cash to work. But to me, it's not worth it trying to get on those 2% dips, 3% dips, because there's always going to be a bigger dip. So I think the biggest thing in the stock market is just to stay patient. Everyone always thinks that they're going to miss out on something, and oh, this is the next Apple, I need to buy it now, and you buy it at the top, and then all of a sudden in 2 months you're absolutely getting killed. One perfect example of that was a stock that I own called Plug Power. I got into Plug Power around $17 a share, and there were some people buying at $75 a share.
Oh.
Just to put it in perspective, it's down 25% this past month, and it was at 75 a month and a half ago. It's at $48 right now.
All right.
So,
now, are you still long, or did you realize your profits?
I sold at about 60.
Nice job.
Yeah. So trust me, stay patient if you guys want to get in the stock market. I guarantee you will see great returns if you are patient.
All right. Great report, Bobby. Thank you for jumping in there. Now, of course, we want to tie something in. It's going to, again, a connection point to inflationary pressures, right? When we have military conflicts in the Middle East, that means oil pressure. That means prices going higher. Now, Syria is not a big part of that right now, but Syria has been a boiling point for some time. We have Russia in Syria. We have the US in Syria. We have Syria in Syria. We have ISIS in Syria. A lot of confusion there. The Iranians attacked the US embassy in Iraq with some bomb strikes past several days. President Joe Biden has taken his first military action as president. Lily, tell us about the bombing of Syria, about the US.
So on Thursday, the U.S. military struck a site in Syria, which was used by two Iranian-backed militia groups in response to rocket attacks on American forces in the same region in the past 2 weeks. The rocket attacks occurred last weekend, where at least 4 rockets struck Balad Air Base, where a U.S. defense company works. And then on Monday, 2 rockets landed in an international zone where many foreign embassies are located. This generated many concerns among lawmakers that said Biden had not asked for the necessary congressional authorization. These attacks drew a lot of criticism from Democratic lawmakers because they believed it was unconstitutional. On Friday, however, the White House said that the strikes were backed by Article 2 of the Constitution, as well as the UN Charter. According to a U.S. official, up to a handful of militants were killed during the strike. This event marks President Joe Biden's first known military action in office. The site was not fully tied to the rocket attacks, but Secretary of Defense Lloyd Austin said that he was confident it was used by the same Shia militias targeting U.S. and coalition forces in Iraq with rocket attacks. John Kirby, Pentagon spokesman, said that the strikes took place under President Biden's orders and were authorized in order to deal with the recent attacks as well as ongoing threats. The strikes destroyed many bases located at a border control point used by multiple Iranian-backed militant groups. Kirby said that the operation sent an unambiguous message. President Biden will act to protect American coalition personnel. At the same time, we have acted in a deliberate manner that aims to de-escalate the overall situation in both eastern Syria and Iraq. Pennsylvania Senator Pat Toomey said Biden is right to respond to the recent Iranian-backed attacks on Americans with this airstrike. The site that the U.S. strike is believed to be a part of a weapon smuggling operation by the militias. The strikes were conducted to deteriorate the group's ability to carry out attacks in response to the previous ones.
Okay, Lily, a tense moment for sure, right? One thing that's interesting about the Trump administration, while they did have some airstrikes in the Middle East and Afghanistan, no war, no new wars, no new troops during the Trump administration, which is really something unusual. Let's hope the same thing here for President Biden, right? We don't want to go back into war in the Middle East. Hopefully this will not escalate too far. Obviously, Republicans are on board with the airstrike. He hasn't really explained it too well. There is some concerns about whether he abuses constitutional authority, which is always the case. When a Republican president uses the military, Democrats say they're unconstitutional moves. When Democrat president uses the military, Republicans say the same thing. So not surprising by that. But let's hope this doesn't escalate into something more serious. But Lily, what was the response like from Iran, Syria, and other nations in the region?
So these U.S. strikes come as Washington and Tehran are positioning themselves for negotiations about Iran's nuclear program. These events will most likely complicate this volatile and difficult process. The Syrian government, however, condemned the attack and called it cowardly U.S. aggression. The foreign minister of Russia said that they received only a 4 to 5 minute warning before the attacks were carried out and that the U.S. was operating illegally in Syria. He also called for better communication with the Biden administration.
If I was a citizen of Syria, I'd be a little bothered by all these foreign nations in my country waging war. Constant problem for the Middle East for sure. All right, we'll keep an eye on this. And of course, markets, oil is the key here when a focus relation to here. All right, great job. The hot topic's outstanding today. Very well presented. Well done. Now, so for a little something more fun, some smiles on the face, it is time for
What Did We Learn This Week?
All right, we're going to give our co-host, we're going to put him last so we can learn kind of hear what we're kind of doing here with what did we learn this week. But since he's still in college, he must have had a classroom last week. So he must have learned something. All right, why don't we rotate a little bit? Jake Murphy, why don't you start us off this week? What'd you learn?
Well, so this week we sort of wrapped up with all of our classes on my last psychology class and my last Spanish class. So mostly a lot of review, but in psychology for our final class, we started learning about schizophrenia and a lot of these sort of mental disorders, which were a little weird, but super interesting to learn about. Very cool stuff. Because most of the time when you hear about them in like the media and movies and stuff, you sort of get the wrong impression of what it is. And so we went more in depth of what the actual biological factors behind these sorts of mental disorders are, and also like how it sort of affects the actions of a person. So very interesting classes there. I really love AP Psychology. It's a shame that it's finally over.
That's Mr. Snyder, right?
Yeah.
Boy, you brought us last week. You brought us lobotomies. This week you're bringing us schizophrenia.
Oh yeah. Every week something new with Mr. Snyder.
All right, Lily Ryan, what'd you learn this week?
So I'm in Mr. Boaz's English class, and this past week we had our final assignment, and we were kind of learning about the different types of commonality among all the texts we've read this year and how to tie that together in a final.
And was there a string that tied through them all?
Yeah, I mean, there was a bunch of different types, but some were like borders, being biracial. It kind of like, there were very common themes among all the different texts we read.
Nice, he's great, of course. Jack Zipper, what'd you learn this week?
So I learned how to write a haiku in English class.
Okay, tell me.
So the first line, you have to have only 5 syllables, and then the second line, it's 7 syllables, and then the third line is 5 syllables. So,
Interesting.
Yeah.
That's my what did I learn this week? Thank you, Jack. And what's the teacher there, Jack? Who's the teacher?
Manganello.
How about Mrs. Manganello?
Sorry, Mrs. Manganello.
Yes, thank you. Nicole Roer, what'd you learn this week?
Oh, this was a pretty sad week for me as I finished my favorite 2 classes, calculus and econ. But this week in my AP calculus class for our final week of the quarter, I got to see a really cool application of anti-differentiation to rectilinear motion, which is something we learned earlier. So if you're given a position function, the derivative of that is the velocity function, and the derivative of that is the acceleration function. So using anti-differentiation, we're now able to calculate it backwards. So if we're given velocity, we know how to find position. And it was just really nice to sort of tie it all together at the end.
Good.
I remember those.
You remember those, yeah? I'm glad that wasn't political. It sounded a little political at first, but I'm glad it was just mathematics. Let's see. Rahill, Jaiswal, what'd you learn this week?
So in my anthropology class, we learned about Easter Island and the huge statues that are there and the civilization that used to be there.
Yep. What I love about those statues is most of them are still underground, right? You see the heads, but there's a huge amount of them that are underground. They're huge.
And a lot of them, and a lot of them are chipped in some ways because when they brought them down, they completely broke them.
Oh, is that so?
Yeah.
Careful. We just dug that up. Okay. Bobby Cribbin, tell us what you learned this week.
Well, in one of our classes, obviously I'm in the media school, so headlines are one of the biggest deals. And kind of related to financial markets, the SEC started an investigation into Elon Musk with his tweets about manipulating cryptocurrencies and Dogecoin.
It's about time. And by the way, did you see what Elon said yesterday?
I honestly did not.
He put out a tweet. He says, "Come on, I hope you do. I'd love to see it." Taunting the SEC.
The man of the people.
Yes. All right, and that is.
What did we learn this week?
Okay, always fun. Thanks for joining me with us, Bobby, on that. All right, now it's time for some King things, and Mr. Cribben is going to start us off. Bobby.
Okay. A group of upper school students will virtually perform the musical Spring Awakening via Zoom on Friday, March 5th, and Saturday, March 6th at 7 p.m. Please be aware that this show is age appropriate for upper school students and adults and not suitable for younger students.
Thank you to all the caring students and faculty across the school who created 350 grab-and-go snack bags decorated with messages of gratitude and happy Valentine's Day wishes.
Yeah, that was nice. That was really well done.
Message from Miss Bo. Last week was Scholastic Journalism Week, which celebrated student journalism. We have a range of publications/media platforms and many ways in which you are able to involve yourself in journalism through courses or clubs at King. Each has a team of hardworking staff members, but in the interest of space, I've included only one student name. Please reach out to a student, faculty advisor, or me if you'd like to learn more or be on our listserv of summer opportunities. Consider these courses when signing up for electives next year too.
Jack, tell us about some of these different publishing organizations.
So you have the Digital Wellbeing Club by Alyssa Kukuraran and Dr. Block. We have Inc., the Literary Magazine Club, which is Greta Hoffmeister and Dr. Gigante. Kingcast podcast with Mr. Roche and all of our team here. And we have the monthly economic report with Sean Mullen and Mr. Roche.
Plus, RJ, what else do we have?
We have the Oat Journal Satire Club with Chase Brown and Dr. Ryan. We have the Pelican Newspaper Club with Joe's Butler and Mr. Boaz, the Weekly Market Report, Mike Gerbic and Mr. Roach, and the Yearbook Club and Publication Classes with Hannah Cosgrove, Dr. Schulman, and Miss Bo.
Okay, nicely done. Always keep in touch with our great King community, and that's a lot of good stuff going on there. I'm glad we're all a part of that. All right, it's now time for sports. Jack Zipper, Rahill Jaiswal on sports. Start us off. Joined by this week again, Lily Ryan. Start us off, guys.
Yeah, so in the NBA, the All-Star rosters have been released, and it includes a record 5 international players. The team were supposed to be Team LeBron versus Team Durant, but Kevin Durant will miss the game with injury, so Sabonis will take his place. Anthony Davis will also be replaced by Devin Booker because of his injury. There are 5 first-time All-Stars on this team, being Zion Williamson, Julius Randle, Zach LaVine, Jaylen Brown, and Bradley Beal. The starters for the Eastern Conference are Kyrie Irving, Bradley Beal, Giannis Antetokounmpo, Joel Embiid, and Jason Tatum, who will become a starter due to the injury to Durant. On the West side, the starters are LeBron James, Steph Curry, Luka Doncic, Nikola Jokic, and Kawhi Leonard. The NBA All-Star Draft is set for March 4th at 7 p.m. on TNT.
In baseball news, the Seattle Mariners CEO Kevin Mather made offensive comments about players and described what really goes on behind the scenes in the Mariners organization. Mather hosted a Q&A and described manipulating players' service time so they didn't have to pay the players as much for the amount of time they played. He also made offensive comments about teammates, including roasting Hiyashi Iwakuma for not speaking English and calling most of the roster overpaid. Mather has since resigned, but this could have implications for all of the league, and a lockout could be on the horizon. Lily, what's going on in the NHL?
So this week in the NHL, the Maple Leafs continue to dominate the Northern Division with 15 wins in only 21 games. This record is being carried by arguably one of the most talented duos in the NHL, Mitch Marner and Austin Matthews, who is currently leading the NHL with 18 goals. Trailing them in second place is the Edmonton Oilers, led by the unstoppable duo Connor McDavid and Leon Draisaitl, who have a collective 74 points in only 22 games.
Whoa.
Crazy.
That's a lot.
In Rangers news, star forward Artemi Paneran is taking a leave of absence due to assault allegations in 2011 that have come out due to political disagreements in Russia. But they were later revealed as false on Thursday after investigation. Like I said last week, the Rangers were facing off against the Capitals and ultimately beat them 4-1. In other news, former Rangers goalie and current Capital Henrik Lundqvist returns to the ice 1 month after open heart surgery. And with Rangers fans back in the building, the Rangers faced off against the Bruins last night with Alexander Georgiev in net, which led to a 6-2 win. The Rangers destroyed the Bruins by scoring 3 goals in the second period, and 2020 first-round picks Alexi Lafreniere picked up his first NHL assist. However, alternate captain Mika Zibanejad continues to lack production on the ice after being the Rangers' top scorer last year. The Rangers did a remarkable job despite losing Artemi Paneran in this game and defenseman Jacob Trouba. Both are major contributions to the team. And this win is a huge win for the New York Rangers, considering the Bruins are the number 1 in the Eastern Division right now.
All right, great sports report as always. I have a few things. First, Lily, the names are great. I mean, you're nailing every one of these things. These are some hard names to pronounce, right?
Yeah, especially like the Swedish.
Yeah, really well done.
Settles German.
Really
Very
well.
complicated.
Nice to have the NHL into our sports segment for sure. Now back to the All-Star game. Who's got some picks? What do you got, Randall?
It depends because they're having a
I'll
draft.
just make a pick. No dependent.
I'll go Team LeBron.
Team
Even though I don't
LeBron.
know
How
the
about you,
team.
Jack? Who you take?
I mean, I have to see the draft first.
Oh, wait. The teams haven't been selected?
No.
Not yet. March 4th.
Oh, I'm sorry. That's ignorance on my part. Rahil, I apologize. Getting all over you for when the teams aren't decided yet. Okay. I apparently wasn't paying attention during the sports report.
You can guess the leading scorer, though.
What's that?
Said you could guess the leading scorer. Like, I'm
Okay.
going to go.
Who do you got, Bobby? Who's going to be leading scorer?
I'm a Celtics fan, so I'm biased, so I'm going to go Jason Tatum.
All right, Rahil, you want part of that?
I'll go with Steph Curry.
All right, Jack?
I mean, probably LeBron is probably going to get the most game time, so I'll go him.
Okay. Does Kevin McHale still play? Because I could pick him. Lily, Nicole, you have anything to add to this? I have no idea.
I actually kind of like basketball, so I'm going to go with LeBron.
Okay, okay, good. All right, thank you for the great sports update, as always. All right, Jake Murphy, we're going to get into some economy and markets. Bitcoin, is it currency? Is it commodity? We're not quite sure. It's acting like a commodity recently. Jake, update us on Bitcoin.
Right. So this is actually going off what Bobby mentioned earlier. So last week we spoke a little bit about Bitcoin and how it seemed to be becoming the new gold for investors. However, this week, Bitcoin slid into its worst weekly decline in almost a year. The price is currently sitting around $47,000, but at its lowest point, it was pushing down at $45,000, which spooked some people into thinking that we could have a repeat of 2018's crash from 20,000. Although the slump was fueled by growing concerns that the crypto has been overbought, it was really kicked off when Elon Musk tweeted that he thought the coin was overbought. This, combined with already growing fears over the volatility of the coin's price, caused a sort of correction that seems to be leveling out. Glenn Goodman, a UK-based trader, called it a virtual forest fire. The wood was bone dry and waiting for a spark, and Elon Musk was that spark. In the case of Bitcoin, however, it could be that its volatility is its strength, as despite this being one of its worst weeks yet, it already seems to be leveling out and is up $1,000 this morning.
Yeah, there's a lot of interest here. And lots of banks have put lots of money into this thing, right? This has now become a speculative asset in a lot of ways. Elon Musk, the master market manipulator, and doesn't get any trouble. What a life. Love it. All right, thank you for those great updates. Now let's get into the economy and markets. Remember, we want to focus on data, see the correlation with market price action. So as always, we check on markets data for the week ending last week and for the week we're in presently. So we start with the data for the week ending February 26th. Nicole Roer, start us off.
On Friday, we had January international trade balance goods only, a deficit of $83.7 billion versus a December deficit of $83.1 billion. February Chicago Purchasing Managers Index, 59.5 versus 63.8 in January. And February U Michigan Consumer Sentiment, 76.8 versus 79 in January.
Let me jump in there real quick. That trade number, again, remember President Trump 2016, we're going to reverse our trade balance with China. Well, our trade balance is getting worse still, right? We're going to have another record international trade deficit this year. Not good. And also, remember, secondary wave effects on continued lockdowns. You can see Michigan Consumer Sentiment in the Chicago PMI. Lily.
On Thursday, initial unemployment claims week ending February 20th, 730,000 versus 841,000 in the prior week. January durable goods orders, preliminary quarter four GDP, our second look at quarter four GDP, up 4.1%. In January, pending home sales down 2.8%.
What has been a bright spot for some time, housing is beginning to roll over as affordability becomes a problem. Bobby.
For Wednesday, we have MBA mortgage applications, week ending 2/19, down 11.4%, and January new home sales, 923,000 units on an annualized basis.
For Tuesday, February consumer confidence, 91.3 versus 88.9 in January.
And on Monday, there was no data.
Okay, now for this week, we're in here starting Monday, March 1st. Let's check on what we have this week. RJ?
On Monday, we have January construction spending and February Institute for Supply Management Manufacturing Index.
On Tuesday, we have no data.
On Wednesday, we have MBA mortgage applications week ending February 26th, February ADP employment report, and February Institute for Supply Management non-manufacturing index.
For Thursday, we have initial unemployment claims, week ending 2/27, Q4 non-farm productivity and unit labor costs, and January factory orders.
For Friday, February employment situation report, January international trade balance goods and services, and February U.S. federal budget balance.
Okay, that's the mother of all data points, right? Friday, the first Friday of every month, as long as it's not the first day of the month, is when we get the employment situation report for the U.S. labor market, the biggest report on the whole planet. Everyone poised to pay attention what's happening with the most economy on the planet. All right, that's a nice week of data for us. Pay attention closely to see how markets react. Of course, we want to tie that into market price action. We'll take a look at markets now for the week ending February 26th. This is week over week data. Rahill, start us off.
S&P 500, 3,811.15, down 95 points.
NASDAQ 13,192.34, down 681 points.
3-month Treasury 0.043%, up 1 basis point.
10-year Treasury, 1.407%, up 7 basis points.
30-year Treasury, 2.154%, up 2 basis points.
Euro dollar, 1.2070, down 50 pips.
Dollar yen 106.58, up 115 pips.
Sterling 1.3930, down 80 pips.
Dollar CAD 1.2740, up 130 pips.
West Texas Intermediate, $61.66, up $2.65.
Brent, $64.42, up $2.51.
Gasoline at $1.95, up 16 cents.
And gold, $1,733, down $50.
Okay, interesting week in market price action. Equities down, right, coming off high, so equities lower on the day. Fixed income interest rates moving up. The yield curve is elevating and steepening as the long end rises. Dollar strength on the week, which is a little bit unusual, but relatively calm. The risk off trade wasn't really a big deal today, even though dollar strength is still elevated near the 140 level. And commodities, we're talking about moving to a new commodity super cycle, right? As we move with COVID relief, the economy rebounds around the world. Commodities are going to be in demand, so that's the play by the very smart money getting in on commodities today. And of course, we see the boost in energy prices and gold languishing in the face of Bitcoin taking over as a hedge against uncertainty and inflation. All right, quick update on markets now. Let's finish off the show with our friend of mine, Lily Ryan.
Do your reading.
Do your homework.
Come to class prepared.
Use your blanket when making turns or switching lanes.
Stop signs mean stop.
No texting while driving.
You're going to kill yourself if you do that. Don't do it. That's it for us. Thank you to our guest host, Bobby Cribbin, class of 2018. Thank you so much for joining us today, Bobby. Of course, join us next week with our great team, Lily, Nicole, Jack, Rahill, and Jake. Tell your friends and family to listen to KingCast at kingschoolct.org campus life page. We're out of here. Have a great weekend.